Hello everyone, my name is Zach and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. Today we're going to be talking about how I paid $0 of federal income tax in 2023. Because I just now filed my taxes and I had an extension, and so it's late in the year, I know, but I got it done. And here's how I did it. All right, so taking a look at this is basically exactly what my tax form looked like. Of course, I removed a lot of the excess that's on the 1040, but you'll get the idea here. So starting at line 2B, that's where my first amount of income was shown on the tax form. That is taxable interest, only about over $1,000 this year. Then 3B, ordinary dividends, about $1,500. A little less than last year. We next have 4B, which is the IRA distributions. Now, this is a curious one here because it's, even though it says IRA distributions, what it's really referring to is my Roth IRA conversion. So this is where the vast majority of my taxable income is coming in financial independence. And for this year, I did $35,904. That's the total value of my Roth conversion. And as you know, whenever you convert money from a traditional IRA into a Roth IRA, it's a taxable event. And so that's why it's showing up here. Next, I have my capital gain or loss. And this year, it actually showed a loss of $904. And I think the main reason for that, obviously, besides just the general volatility of stocks, because my asset allocation is currently still 100% stocks. Besides that, is that I did a big tax gain harvesting event in 2021 where I harvested $55,584 of capital gains. And what that did was in 2021, I said, hey, IRS, go ahead and tax me on all these unrealized gains that I have. I realized them, I sold them, realized the gain, and I bought them back immediately. That meant that I paid income tax on $55,584 of gains. However, at that point, I happened to fall in the long-term capital gains rate that was taxed at 0%. And so basically, I got to reset my tax basis without paying any tax on it. And so now, with my higher tax basis, when I go to make an asset withdrawal, where I sell off some assets in my taxable account, the amount that I'm going to pay, like the amount of gain, is going to be smaller because that tax basis was reset. And in this case, in that year, it was slightly at a loss. So that's why it's showing negative 904. Next, I have my Schedule 1, which comes from my Schedule C, which is my small business, which is on cash flow. So this is the amount of profit that I showed on my tax form this year. That is $7,024. Now, when you add all of these up, you have line 9, which is your total income. And for me, that would be $44,601. However, we get to adjust that down. For line 10, adjustments, these are my adjustments, $8,197. That's the accumulation of my HSA contributions and half of the amount of self-employment tax that I paid. Because while I didn't pay any federal income tax in the end, I did pay some self-employment tax, because the self-employment tax is based on, when you're self-employed, the profit you made from your business. So that $7,024 of profit that I made, I paid 15.3% of that towards self-employment tax. Take a quick look right here. This is what my Schedule 1 would look like. I just have my HSA contributions for myself and my spouse that year for $7,700, and then half of the amount of self-employment tax that I paid, $497. That gives me my total adjustments of $8,197. All right, so come back here, we go ahead and adjust that down. And so my adjusted gross income is $36,404. But that's not all. We also get to take deductions, right? So for me, I don't itemize anything. I don't have enough itemized deductions. So I take the standard deduction. That's $27,700 that year. And I also get the QBI deduction, which is the qualified business income deduction. Just based on my self-employment, the small amount of self-employment income, I get to deduct some of it based on the QBI formula. So $1,307 for that. You add those two up and you have $29,007 of deductions. Reduce that from my adjustable gross income, and we have a taxable income of $7,397. Now, that's going to put me in the 10% marginal tax bracket. So let's take a look at the tax table real quick. You can see for 2023, the 10% marginal rate, my income was $22,000 or less, which is married filing jointly. And so I get to pay 10% on that amount. So multiply that by 10%, that's about $740. However, here's the kicker. The reason why I paid $0 of federal income tax in the end was because of the saver's credit. So the saver's credit was equal to my tax bill. And that's because the saver's credit, it can only eliminate your tax bill. It can't make it refundable. So it's not a refundable tax credit. So technically, if I were to have a higher tax bill, I would have qualified for a higher saver's credit just because how much I contributed to my IRA. So in this case, the way I qualified for the savers credit was I put money into my Roth IRA, some amount of money, because I can do that because I have some profit, some self-employment profit. So my on-cash flow profit of $7,000, I'm able to put up to that amount into an IRA. So we can see right here, the 2023 Savers Credit. Technically, I qualified for the 50% of my contribution for married filing jointly because my adjusted gross income was less than $43,500. Going back there, you can see my AGI was $36,404. So I technically qualified at the 50% rate. So let's say if I contributed $2,000 to my Roth IRA that year, then I would qualify for a $1,000 tax credit, which is more than the actual taxes owed. And so it just equals the amount of taxes owed. And that's what made my income bill $0 for the 2023 tax year, even though I'm telling you this in late 2024 because I did a tax extension and I waited pretty much to the last minute. The reason I am mainly showing you this is because when you are financially independent, you can spend a lot more than what your tax return shows, but your tax return is only going to show what is actual taxable income. And so the amount of taxable income you might have while you're financially independent might make it very easy for you to basically pay $0 of federal income tax, or at least a very low amount of income tax compared to what you're used to when you were working full time. And if you think this is helpful and you might want to improve your own taxes, then consider booking a consulting appointment with me. You can go to oncashflow.com/consult. And on there, it has all the information you need. If you want me to just take a look at your taxes, maybe I can help you out with something. Maybe I can save you a few $100s on your taxes, or possibly thousands. Who knows? Thank you so much for watching this video. I'm Zach from oncashflow.com, and I hope to see you next time.